Okay, let's get going. Um, so good morning, everyone, and thank you for joining us for the first session of our Ag Speaker Series, our Commodities Outlook. My name is Tyler Weston. I'm the VP of Small Business Advisors here with Innovation Federal Credit Union, and I'm sitting here based in Swift Current, Saskatchewan. On behalf of Innovation and Innovation Wealth, it's my pleasure to welcome you all to today's webinar. Before we get started, I would like to begin today's session with the land acknowledgements. In the spirit of truth and reconciliation, we acknowledge that we are on the traditional territories of the many First Nations, Métis, and Inuit who have graced these lands for millennia. We're privileged to live on, work on, and enjoy the benefits of these lands, now known as Canada. I myself join you today from Treaty 4 and the homeland of the Métis. We're happy to have about 206 attendees joining us from across Canada today for this session. Before I introduce to you our speaker, I'm just going to run through a few housekeeping items for this morning and a few details about today's session. So we're using Microsoft Teams for this webinar. If you're new to Teams, for attendees, your video has been turned off and your audio is set to mute. This will just allow for today's presentation to go as smoothly as possible. And we encourage you, probably the biggest thing for attendees is make sure you're asking questions in the chat throughout the session. We're going to be monitoring that through the morning and make sure that Brad's able to answer them as time allows, of course. If you're having some technical issues or any difficulties during the session, just let us know in the chat. If it's freezing for you or you're having issues, I would say something that does work is refreshing your browser and exiting and rejoining the meeting would be the one tip I would give you. So without further ado, I'm just going to introduce you to today's speaker, Mr. Brad Magnusson. Brad spent the last 30 years working with producers and businesses to create strategic business strategies that enhance profitability. Brad is the CEO of Magnusson Consulting Group and provides market intelligence to a variety of businesses on a global basis. Brad has held senior positions with multinational financial institutions, government lending institutions, and the Credit Union Central of Manitoba. He spent all of his working career providing global agricultural analysis and market intelligence. He is responsible for the analysis and forecasting of macroeconomic and financial market developments, grain and livestock market analysis in Canada, the United States, and key economies overseas. He's traveled extensively with over 800 producer groups, businesses, and credit unions to prevent seminars, workshops, and courses in every corner of the Canada and US. He has been a keynote speaker at the American Bankers Conference, the Credit Union National Banking Conference, and has been a past board member of the Manitoba National Agrologists Association and a past board member of the Manitoba Rural Adaptation Council. With that being said, let's welcome Brad to the webinar, and I'm going to turn things over to you.
Thank you, Tyler. Good morning, everybody. I think most of you have met me before many times. It's like old home week when we get together. And this year is going to be kind of interesting. We've got some massive changes in the commodities, particularly on the grain side, that we're going to go through. Again, as Tyler mentioned, please put your questions in the chat. I can't see the chat, okay, because my presentation will be up. But Tyler will be stopping me and asking the questions. I want you to stop me and ask questions. This is going to be an interesting year. We've got to get as much information out to you as absolutely possible. Knowledge is power, and to understand that markets and what they're doing and how they're going to operate is going to be key to success this year. I'm going to shut my camera off, and the reason why I'm doing that is just for speed so I don't hang up. So I'm going to shut it off, and I'm going to share my screen, and we're going to get started. Okay. So as we mentioned, we're going to be talking about the grains, commodities. The topics that we're going to include, this is kind of the preview. We're certainly going to talk about Canada and China. We've got a deal with China to reduce certainly the tariffs, or the stoppage, I guess, or the opening of the buying from China on a number of fronts, including lobster, beef, and of course our canola. We're going to try to talk about very, very quickly the global economics and what's happening pertaining to agriculture. Unfortunately or fortunately, we do have to talk about Trump and the impact of policies in the U.S. And of course, we've got to talk about, where can we make strategic sales in our commodities to take advantage of the opportunities that come in 2026, 2027, as many as we possibly can. And that's going to be a very difficult thing. So we're going to talk about, of course, the U.S., the world economy, the U.S. economy, China. We're going to just quickly pass, and we're going to talk a little bit about the war in Ukraine. And I'm talking about if we get some sort of settlement with Putin. I think that's going to be very, very difficult to do. But what happens to the grain markets if Ukraine starts shipping their normal amount of wheat into the global market? We're going to talk quickly about the global economy, the oil, and then we're going to talk about supply and demand, and then we'll get into the grain cycle and the grain outlook. So that's our agenda. And remember that for you guys that have cattle, February 2nd, 1 o'clock in the afternoon, we're going to go through the cattle business. For the cattle guys, you're going to be extremely, extremely happy as we go through. I think you're going to see that we are going to probably build herd in 2026, but it's going to be very slow. And I think it's actually going to be very slow in 2027 as well, as I traipse through United States and places like Argentina, even India. And what impact does that have on beef and beef prices? So one of the things that we're going to talk about is shifting, hopefully in 2026, shifting from headwinds in the economy, hopefully to tailwinds. Now, why is this important to us as producers? Because the headwinds, the global economy is still, I don't want to say it's fragile, or I don't want to say it's weak. It's starting to improve. And that's going to be the start of more improved prices for us in the commodities. But we're still a long ways away from real strong tailwinds. We still have a bit of those headwinds. So if we look on global, by the way, this is brand new information. It was out Monday at about 9 o'clock in the morning. This is the International Monetary Fund. For you keeners in the room, you'll notice that I'll talk about where I get my information from. The IMF is I think it's probably the best global outlook source that the world has. It's really what places like China, United States, Japan, Germany utilize as to say what's going on in the world. We're sitting at about 3.3% GDP globally. Now, put that in perspective. We would love to see the global economy be at around 4.2, 4.5. And that's why, because then they simply buy more. They simply buy more goods. But if we take a look at United States, 2.4, that's it. Remember what I always say is 3.2 for Canada, United States, sort of more the European area is strong growth. I would say balanced growth, where we're buying agriculture because we're generating GDP. 2.4 is nothing to write home about, but from an established, if we were to look at the more developed nations, 2.4 is actually going to be probably the best. So United States is actually the country that is driving growth. Now that can be very positive to Canada because a lot of our products, up to words around about 82% of our GDP, goes into the United States at the present rate. But look at the European Union. Oh my God, 1.3% growth. Germany, Ireland, England, Italy, not doing well. Now, remember, that's a huge economic engine for the globe. We would rather them be growing at, again, 3.2. That's going to buy GDP or buy goods. The developing nations, and I'm going to jump to the next slide because it's going to give us a better idea. There's United States at 2.4, 2.0 in 2027. Nothing to write home about. And of course, Canada. Boy, we are not doing very well. We're going to do about 1.6, and that might be a little bit generous, maybe up to 1.9 as we get some of these projects going. And hopefully we get more pipeline, both on the liquefied natural gas and, of course, pipelines going out to the west and south. Hopefully, we get some more GDP. If we look at China, 4.5, do I have that? Yes. 4.5 is, remember that China 4.5, if we were to compare China's economy to the U.S., it's a little over half of the U.S. economy. So 4.5 is really, really, really not doing that well. India is probably the best country at about 6.4. Again, that's not bad. It's, if we look at the previous year was 7.3. Remember that China and India are massive buyers from Canada. If we're doing lentils, chickpeas, peas, China on the wheat side, on the canola side, we want them to be a lot stronger. Remember, if you were listening to me about 10 years ago, 8 years ago now, we would be at about 13.2 for China and about 7.7 for India. So still, remember, why do we have low grain prices right now? All of that is contributed directly, ladies and gentlemen, to the world's GDP. That's why I focus on it. We want to see that improve. Okay, let's move on to what are our risks? Well, we've got, on a global basis, we actually have had a strong Dow, a strong TSX, or the Toronto Stock Exchange. And a lot of that has been on the back of AI. If you look at copper, everybody's phoning me and saying, Brad, we must be doing really well on GDP in the world because copper's gone crazy. No, we're not. Copper's gone crazy because we're buying mass amounts of copper for creating our space, okay, our holding space for AI. We also, right now, everybody's in Switzerland right now to talk about world GDP, and there's a lot of trade tension. Tyler was very nice to me and said that I've been doing this for 30 years. Tyler, I've been doing it for over 40 years, and I have never seen tensions this high. There was tensions in 1980 when Russia went into Afghanistan, and we stopped selling wheat to Russia, but nothing like it is today with the political tensions that we have surrounding places like Argentina, Canada, and of course, Greenland. Maybe Trump needs to go to Greenland and, in the wintertime and see what's there. Anyways, also, too, one of the things definitely for Canada, we have larger fiscal deficits. We also have high public debt, but we also have very, very high personal debt. On the upside, AI has certainly reinvigorated the global economy from a point of view of technology. And of course, hopefully that we still have some easing. What am I talking about from easing? Cheaper interest rates. We still see interest rates probably headed downwards, particularly in the US, but even here in Canada. So what we end up with is a record Dow, which is actually a little bit worrisome because we don't have that strong GDP. The only thing that's moved it, I would argue, from January of 25 to today is AI. Now, in other words, things like Procter and Gamble's, things that you buy every day, liquid soap, fertilizer, chemical, that's not what's supporting the Dow. It's really only about 7, maybe 8 companies that are really pushing that Dow up. So if we get to the point where AI spending starts to slow down, and it's actually starting to slow down right now, we probably are going to see a lower Dow as we go through early parts of 2026. So the U.S. economy on the positive side, we certainly still have some interest rate cuts. I know Trump is not happy with the Fed right now, wants them to cut rates faster. You got to watch when you do that because you can actually spur inflation. We've got low oil prices. Now, low oil prices should convert very, very quickly into lower commodity fertilizer prices, but of course, that's not the case. Now, we've also got this massive increase in the Dow, which has affected wealth. Now, one of the good parts about a strong Dow is, if we look backwards, is actually the cattle industry. With a stronger Dow, whenever the Dow is going up, beef demand goes up. It is simple. It is very, very simple, ladies and gentlemen. When we have a strong Dow, people believe that they have more cash and they buy more of our higher end goods, particularly beef. So keep that in mind as we start to slow down the Dow as we go through 2026. The other thing, of course, that's affecting global economy is our tariff rate quotas. Now, this was done back in November, and we don't have the updated version yet because we don't know what they're going to be, with United States putting tariffs on the European Union and the impact that that's going to have backwards from the European Union into the United States. But if we look at Canada, has one of the lower, if you drop your eyes right to the bottom, Canada has overall effective rate by country is about 7.4. India and China are the highest, 32.6 on China, 35.3 on India, Indonesia, Turkey, Brazil. You notice what Trump is doing is he's trying to hold back the BRIC countries. And in fact, I would argue that the invasion, for lack of a better word, into Argentina, Venezuela, was a result of holding back the BRIC countries and also limiting the ability of China to buy Venezuelan oil and move that into the United States. We'll talk a little bit more about that. Quickly, China, again, China is the biggest buyer of commodities in the world, bar none, period, done, drop the mic. And what's interesting, though, is we've seen this continuous fall of housing prices. I mentioned it to you about 3-4 years ago. I think we started looking at it in 22. But we see this continuous fall off. What that tells me is that there is a lot of problems in the Chinese economy, and every time they try to stimulate the economy, they get this short bump, like early in 2025, and then it falls right back off. Remember that we want a strong Chinese economy, actually, for them to buy our wheat, our peas, our canola. Productivity also in China is going down, but one of the major slides, this should be a wake-up call for a lot of different nations, but this slide, one of the most important slides that we have for Canada, is right here on the right side of your screen, that shows the decoupling of the U.S. economy from China. In other words, China is doing a lot less trade with the U.S. You see the U.S. strongly going down. Places like Latin America, Southeast Asia, A little bit on Europe is going up, where the trade with the United States is going down. Now, a lot of that is because China's not buying soybeans out of the United States. They're buying them out of Brazil because of the big Brazilian crop. Canada's economy. Oh my goodness. What can I tell you about the Canadian? This is about the best slide. I could tell you who I've named that slug for, but that wouldn't be nice to the individual who's dating some singer right now. Anyways, yeah, slug. First of all, GDP growth, again, we're sitting at about 1.6. We might get there. I'm going to show you a couple of slides that's going to put this forecast maybe at risk. And talk about non-commodity exports. The blue line is what you should be focusing in on. Really, we have not gotten back to where we were, say, in the first quarter of 2024. We're still below, and of course, what's happening in the U.S. limiting us is going to be important too as well. We do have to shift away from the U.S. That is not easy. I get very, very frustrated when talking to politicians about, well, simply we'll just sell canola to somebody else. No. And I'll prove that to you unequivocally in a little bit. The other thing that what's happening is our retail trade. Look at December of 24. Our retail trade, especially in the last 2 months, has really, really sunk. And what that means is that you, the consumer, we in Canada are not buying. We are really holding our cash. We're worried about layoffs. Of course, there's a number of layoffs in the federal government, which is probably good. But anyways, but we've got a report out right now that the majority of companies in Canada, or a large percentage of the companies in Canada, these are private companies, are not going to be hiring, or are actually going to be possibly laying off people in the not too distant future. And we can see that in our consumption. If you look at our consumption in 2026 in the first 2 quarters is very, very low, 1%. And then we get a little better in the first or the second 2 quarters, hopefully a little better in 2027. But, one of the things that we're going to be really cautious on is population growth. As you've heard me, I've been very critical, very, very critical of our population growth, and do not think that I am anti-immigrant. Our family came from Iceland to Canada in 1882. I've got a lot of friends that are new Canadians. I'm not anti-immigrant. What I am is I want an increase in population that is reasonable, that our services, healthcare, every service, healthcare, even roads, unemployment can handle. The GDP of the country can handle it. So, and we just are not there. We cannot have mass immigration if we're going to have poor GDP. Other things is hopefully that we start to see some growth in investment. Really what I'm wanting to talk about, or wanting to pursue with the federal government, is oil and gas, certainly for Western Canada, certainly for Saskatchewan and Alberta. You know that I'm a strong supporter of oil and gas. I work in the oil and gas industry as a consulting economist. There's nothing that, I'm about as redneck maybe as my cousins who are actually in the oil and gas industry in Alberta. Okay. Inflation. We're actually gonna see inflation jump up here. We know we noticed that it did, but I think that food inflation, I know that the Liberals have been very, talking, food inflation is going down. Actually, I would argue that in November, December, and January, food inflation is starting to hit home. So we do see, 2% inflation. I think it's probably going to bounce. If you see my projections here in the first quarter of 2026, and hopefully that food inflation comes back down. What's frustrating about food inflation is, yes, we have higher cattle prices, but we don't have really massively higher hog prices or grain prices. So in other words, who is getting that money? It's sure the bejesus isn't the grain farmer or the hog farmer. And even for that, the prices are very high on cattle. But I was in Safeway yesterday here in Manitoba. And no, sorry, I was in Costco. And there was three prime rib steaks, and they wanted $109 for them. Now that's not what the producer's getting. So just keep that in mind. The other thing is wage growth is really softening, particularly in the last couple of months of 25. In other words, we've got higher costs, energies, for, to heat our house, to the food we buy, to the parts we buy. God's sakes, I went into John Deere the other day and I thought I was buying their entire dealership for the seals that I needed. Our wage growth is simply not keeping up with that. Consumer spending just showing you in the last little bit of 2025 really starting to come down again. The other thing that we are probably the most worried about, and I think one of the reasons why our current government is looking to other countries to diversify, is KUSTRA is up for not renewal. Okay, let me be crystal clear about this. KUSTRA, the Canada-U.S.-Mexico agreement, expires January 30th of 2026. 90% of our trade with the U.S. is under the KUSTRA agreement. However, there is a it's built in right to the agreement, because I've read the agreement many times, is right in for July of 2026. Now that then causes, of course, the Trump administration to say, hey, we want to renegotiate. That's going to be the one where if Trump and the U.S. Takes a very, very hard line on the July agreement date, and they want to renegotiate pretty much everything, then we're going to have more hit to our GDP. So again, we've got to look at that. One of the things that I wish we could do as producers is to stop listening to Trump or to the rhetoric that comes out of the U.S. Now, I know that's incredibly difficult, but what he is doing is he is pre-negotiating. He's putting the fear in in Canadians as to what is going to be happening. Until we get into those negotiations and the real wants, needs, desires of Mexico, Canada, and the U.S. comes through, is going to be interesting. Just to let you know that Canada is the largest, let me repeat this, Canada is the largest investor in the U.S. We buy a tremendous amount of their government bonds at the state level and at the national level. And of course, the EU and China is very, very large. That's going to be something that we need to keep thinking about as we are negotiating. So just something to think about. Okay. I'm going to stop there for a second, Tyler. Is there any questions on sort of the big macroeconomics?
There's one that just ties probably what you're going to go into next. Just looking at the Q&A here. Here's a question from Curtis. Canada's 2025 GDP is about 2.2 trillion. How much higher might it be now if we had built pipelines to Tidewater, oh, say 10 to 15 years ago?
I
Or
love you, Tyler. Curtis. Sorry, Kurt. I love you too, Tyler. Anyways, Curtis. Oh my God, we have the worst GDP by productivity of the top 30 nations. It's actually bizarre. Um, you're not, I would argue right now, we would definitely see a higher GDP. Probably, I would say more so in, I'm going to be right now. Okay. I'm just talking about right now. I think we'd be in that very, very similar to the US, 2.6, 2.8. Now, but having said that, here's the kicker, Curtis, honestly, is that we missed 10, 11 years of massive amounts of GDP growth, billions and billions and billions of dollars to go into the Canadian coffers, the tax, the ability to build hospitals, emergency centers, better highways, just the province of Alberta, and, I hate to say this because it incredibly frustrates me, but um, it also, you're going to be mad at this, Curtis, but it actually stopped us from even giving more money to Ontario and Quebec. My mother always said, when I did something stupid, my mother would say that was asinine. I don't know what that means, but it doesn't sound good. It was absolutely asinine that we did not build strategic when we had that opportunity. But you're talking about billions and billions and billions of dollars. Anything else, Tyler?
no, that's our only question right now, Brad, that I can see.
Okay, let's go into oil and gas. Now, you heard me. I've been warning you for the last couple of years now that oil and gas, we're going to get to a point of with a weaker global economy. And remember that oil and gas is a function of the global economy. That oil and gas is going to take a bit of a hit, and it's going to be fairly deep. But one of the things I want to show you is from a strategic point of view, and this is what blew me away, over the past 10 years, is if we look at proven reserves, Venezuela 3.3, Saudi Arabia 2.67, Iran 2.8. Look at Canada 163.3. Now here's the kicker about Canada. We are a solid nation that gets along with pretty much everybody. And we are very stable. We are a good source. We're not like other countries, Iran, Iraq, Venezuela, whatever. We are not, hiring or paying for armies or whatever. So when we look at exporters, okay, who's number one? Well, essentially, well, 1.191 billion. Russia, these are top exporters. Of course, the U.S. is become an exporter. But look at Canada. We're not very far behind the U.S. Iraq, Norway. Norway is an interesting country because they have, I think somebody mentioned they have $4.3 trillion in the bank because of oil. Which is really interesting. Brazil, of course, Kazakhstan, and then Nigeria. But interesting. Look at United States, ninth. They only have 55.3, and that oil is all hard to get to. It's all frackable oil. It's not like the. If we look at then the leading exporters, we said Saudi Arabia was number one. Of course, number two, Russia. Number three is Canada. United States is fourth, looking at it in a little bit different way. Largest oil consumers. Look at China, way back over here. I don't think you can see my pointer here. but 15.15 billion barrels per day. That is consumer. So where are we going to ship oil to? It's going to be United States at 20 and China at 15.5. It is simple, ladies and gentlemen. Where are we going to sell oil to? Well, India, China, Japan, but look at the big dogs. United States, China, by far the biggest. We are going to, though, see a bit of a glut. You can see that it's not a super glut, but it is a glut of oil coming. Actually, oil should be around about $52 a barrel right now. It's around about $60, $61 a barrel. Why? Because we got about $10 right now in for what the oil traders call is just simply the potential for global issues. Our Venezuela, China, United States, Russia, what's going on in the Gulf right now. If that was to go away, in fact, I'm probably going to start shorting oil fairly soon. If we start to, if Trump can ratchet down the rhetoric, okay, we would see oil fall to about $52 a barrel. This is just global production, just showing you as we go through 26 and 27. I think I'm going to be pretty accurate with that. And oh, by the way, the source of this information, if you're a keen person on the oil and gas, where do we get the main source of our information? Certainly from OPEC, certainly from EIA, which is the Energy Institute of America. There's also the International Institute of International Oil Institute. Sorry. So good information from there on a weekly basis. We do expect oil prices to decline about 19% on Brent, averaging about 54. Brent's right now in around $60 a barrel. Remember what Brent is global, how we price oil outside of North America. And of course, in North America, we use Western WTI or West Texas Intermediate. We expect global production will increase by about 1.4 million barrels per day. Some of that will be OPEC. We'll see what Russia's going to do. United States it's going to be interesting because at $50 a barrel oil, that fracked oil is getting more and more expensive. U.S., reached a record at 13.6 million barrels per day. They are the biggest producer in the world, but are declining about 1%. So if we look at West Texas Intermediate prices averaging in around $52 a barrel without, I'm underline something, without any rhetoric going on in the world, we're looking at about $50 a barrel for 2027. Now, remember what I said about cycle. Cycle is generated. We start with oil. Oil has to recover. Let me repeat that. Oil has to recover before grains recover. Now, what's before that? Well, global economy has to improve. Global economy's got to get to, say, 3.6, 3.8, 4.1 before we see oil production, hence then global food trade before. So we're still looking, ladies and gentlemen, at 2020, barring no massive conflicts, okay, we're still looking at oil to be in and around 50, 55 bucks a barrel going into 2027. Now, that should be good for our commodity prices on the input side, our fertilizer, our chemical. Of course, one of the things, though, that we still have, and Curtis, we still have is this massive blockage where oil has to come out of this area. I'm going to jump out of here for a second and just grab this slide. Whoops, wrong slide, but I'll get there. Let me blow this up a little bit. So oil actually, what happens to it, if I can get it to here? I'm going to grab this guy here. Oil comes here, goes all the way to here. That's Chicago. Problem is we don't really refine a lot in Chicago. Actually, the oil's got to do a loop. Okay, the Canadian oil's got to do a loop like this, because that's the way the pipelines run. You know, the major Enbridge pipelines go in that direction. So what we would like to do, I got to get out of here. Thank you. What we want it to do is certainly to come from here straight down either into Cushing's or into some of the major manufacturing. A lot of that cracking is done right here. Actually, this is why, let me turn this around. The United States loves heavy oil. And that's where the crack plants are, because that's where oil, especially Venezuelan oil, is all heavy oil. So one of the reasons why the United States wants Venezuelan oil is to certainly diversify from Canada, have another source, but also stop or slow down the exporting of oil from Venezuela, which is the biggest proven reserves in the world, 3.3, into the United States. Okay, so this is a structural thing that Trump is doing as well. But if we look at West Texas Intermediate, as of January, that's Monday, you can see that massive fall off from, say, of 23, June, July of 23, we're sitting at $90 a barrel, $95 a barrel, and we're sitting Monday at that time was $59.44 a barrel. I think it's up a little bit now. But you can certainly see that direction going down. If you follow cycle, this is a perfect cycle. This is just normal economics, ladies and gentlemen. Okay, the other thing, though, is Canada. This is one of the things that we got to think about. Canada, back in 1993, we shipped about 1.3 million barrels a day to the United States. At that time, Venezuela imported 1.18 million barrels per day. Now we actually export 4.47 million barrels a day. And of course, Venezuela only ships 0.15 million barrels a day, a massive difference, which really then puts a lot of onus on the Canadians to ship into America. And so what we've been actually doing is Canada has been displacing Venezuelan oil for the most part. We don't want that to continue. Here's my point, Curtis. My point is that if we don't get more pipelines and Venezuela starts to increase the amount to 2 million barrels a day, then we're going to need to have exports going out to places like China, India, Japan, Indonesia, Malaysia, the Philippines, to counter the backwards displacement of Venezuelan oil versus Canadian oil. So, by the way, if there's anybody here that's in the politics side of the government, for God's sakes, listen to me. Nobody listened to me for 10 years. Actually, my wife didn't listen to me for the last 43 years, so I don't know why anybody else is. But this is massively important. Okay. Just looking at, there's different areas of United States. We do ship a fair bit of oil into the Rocky Mountain area. And of course, we send a lot of oil into Chicago, or through Chicago, not into Chicago, but through Chicago. This is just the imports, millions of barrels per day. I'm going to jump through because I'm going to get short on time. But the U.S. refineries are really reliant on Canadian heavy oil. And of course, Trump is trying to displace that with portion Venezuelan oil, just net oil supplied to the U.S. as a safe supplier. But you can see, as we go up to 2050, we could see, a fair bit of crude exports. I'm going to jump through this. This is just Venezuela. The impact of Venezuela on it's going to take a lot to change this graph right here, right there. It is going to take we're we're not going to see a lot of oil immediately um, displace Canadian oil. But there's an old saying, we overestimate the short term and underestimate the long term. This is the time then that we need to build the pipelines so that if Venezuela or any other country, Saudi Arabia, Iran, Iraq, decides to displace Canadian oil, we've got to be ready with pipelines going out to the West Coast. Okay. Quickly, Canadian oil. This is just the benchmarks, West Texas Intermediate, Brent. What we price oil into is the Western Canadian Select, WCS, or Edmonton Par. When I'm talking to my oil companies, we really don't talk in Brent, or we certainly do in West Texas, but certainly in Western Canadian Select or Edmonton Par. And the difference, though, this is West Texas Intermediate against Edmonton Light or West Canadian Select. And, we're basically at about $11, $9, $10 difference between West Texas Intermediate and our price. And that's very, very, very frustrating. That's the cost, Curtis, just for your sake of knowledge. Think about the millions of barrels a day that are going through the pipeline in Enbridge. And we're losing $11 for every barrel that goes through. If we had pipeline, we would keep that and probably elevate the price yet again. I've got a whole bunch of slides. If you guys want to go through these, be my guest. If we're looking at who owns Canadian oil, unfortunately, Imperial owns about 7.6. ConocoPhillips, 2.9. This is just for if you guys want to go to curling tonight, you can look really, really intelligent and say who owns a lot of the Canadian oil. About 70% of our oil is owned by the U.S. We own about 30% of it. That's it, ladies and gentlemen. That's very, very frustrating to me. Natural gas prices, which again, we got to think about from fertilizer nitrogen, 3.50 million per British thermal unit. That should tell me that nitrogen should be actually quite cheap. Laugh out loud. Probably, certainly not the 794, but certainly somewhere down into the 400 or 500s. I'm just looking at it as a pure cost of the raw commodity. Certainly you can see that in 2022, we went up to $9 and we're sitting at about $3.50. I'm going to click through here. You guys want to read all about this, you can certainly, and that's why I put them in, is just to give you guys knowledge of what we're doing and some more information on the oil and gas industry. Certainly if anybody wants to, learn more about it, I can certainly help you out there. But also too, this is just gas pipelines coming out of Alberta. You can see them, and then the feeder lines going through Regina, Winnipeg, and then on to Ottawa, Toronto, and then into Quebec. Click through here. Okay. One of the things, though, that is frustrating Canadian farmers right now is the U.S., this bridge program that the U.S. is getting. Of course, you know that the Liberals are going to come up with a subsidy program in Canada, right? Yeah, no. But just to give you an idea, I just wanted to quickly show you, it's about $12 billion that's going out. Put it in perspective. Basically, it is a subsidy, is not a loan. I would argue somebody that knows a fair bit about the WTO, this would be absolutely unequivocally counter to the WTO, and we could certainly take the U.S. to court to the WTO. Unfortunately, that Trump really has, the WTO is really not relevant right now. This is a one-time payout on the major crops, corn, certainly soybeans, wheat, cotton, sugar beets. And essentially, it's about $44 for corn. It's about $30 an acre for soybeans, with a maximum being about $155,000. You do have to have a gross adjusted income below $900,000, but it still is a subsidy that would be counter to the WTO. Okay, let's stop there for a second, Tyler. We're getting close on time. Any questions?
We do have one from Patrick in the chat.
Patrick.
It's a bit of a longer one, so I'll do my best here.
No, Patrick, I'm surprised.
So is it safe to say that Trump's move on Venezuela is a double-edged sword and that he's trying to control the oil flow to China and therefore their economy? And by moving more of that oil to Texas, the U.S. is becoming less dependent on Canadian oil, which is probably putting some pressure or control over Canada through that.
I think actually Patrick, quite frankly, Tyler, did a much, much, much better job of summing up my comments. I think, Patrick, that was a perfect sum up. And I actually wouldn't mind you reading that once again, Tyler, because I think it's a perfect scenario.
I'll read it out here. Is it safe to say that Trump's move on Venezuela is a double-edged sword in that he's trying to control the oil flow to China, in brackets, and therefore their economy? And by moving more of that oil to Texas, the U.S. is less dependent on Canadian oil, which makes it easier for him to pressure/control Canada, in brackets, as per yesterday's picture where he had the U.S. flag showing over the map of North America.
Yeah. That is one. Certainly, I think also, he wants to diversify, which actually isn't a terrible thing if you are the U.S. Where the lack of then pipelines going out to the West Coast, and for that matter to Churchill, if we want to make that argument, really becomes, from a national security, from a national GDP, the requirement to have bigger, larger new pipelines I believe, is becoming an easier and easier argument. Now, we could argue, should they be built 10 years ago? Well, of course. But yeah, I think it's becoming incredibly clear. The worst thing that Canada can do is drag its feet for the next 5 years. That's the absolute worst thing in my mind, as for Western Canada, for the province of Saskatchewan, for the province of Alberta, for that matter, the province of Manitoba, Ontario, and Quebec, who theoretically are a have-not province, or provinces. But Patrick, you summed it up perfectly. Any other questions, Tyler? That was fantastic.
No, I think that's it right now, but maybe just a time check, Brad. We got about an hour left, and I know you've got a lot of stuff to get through.
We're going to get on our horse now. Now, one of the things I want to show you is this chart here is incredibly important. And it's going to set up our entire discussion of this morning. What I'm showing you is out of Bloomberg News. But I actually know the guy that did this. This is Peak Trading Research, a very, very good agricultural research firm. One of the best. If we look at, this is the red or negative returns by year and positive. So the red is negative, the green is positive. If we go through 2016, 2017, 2018, 2019 on corn, we had, to their full cost of production, including their debt, i.e. living, all that kind of fun stuff, we showed, a pretty negative return on corn, 20, 21, 22. And this is on the national average of about 171 bushels per acre. 22, we showed very large growth. 23, 24 wasn't quite as big. 25. Chicago wheat, you can see it. 2018 was 0. 2019, 20, 21, 22 were good. 22 wasn't. But look at how negative 23 is. Kansas wheat, all the wheats negative 13, 23, negative 22, negative 16, negative 24. Soybeans, negative 3. Soybean meal, negative 16. Bean oil being 15% up. Canola, 8% down. Rapeseed in Europe would be 2%. Palm oil, negative 5. Cattle's up, obviously. Hogs are up. Cotton's down. Sugar's down. White sugar's down. Coffee is up. Oh my God! I don't know if you guys bought coffee lately, but I'm a good Icelander and I drink coffee religiously. Everything else is down. And look at coca is down 56%. Now, the reason why coca's down so much is look at the previous year. It had gone absolutely crazy. Orange juice is down 53%, oats is down 14%, rice is down 36%, and milk is down 23%. The point to this, ladies and gentlemen, the point to this is that in 2025, and as we look out into 2023, not much has changed. In fact, when I run the returns for the US, it actually gets worse for the major commodities that we produce: the corn, the sugar, the soybeans, the barley, the oats, soybeans, canola, whatever it is. In fact, if we look at our budgeting, this is out of Purdue University in Purdue University. Not an awful lot of a return, looking at Illinois agriculture. And I've spent a lot of time in Indiana, Illinois, Southern Michigan, Ohio, of course, whereas I did my postgraduate studies. And there's not a lot of profitability, considering, especially when you start putting in the rent. Some of these crops are looking like that. Geez, I'm making $200, but you got to remember that your rent cost is $350. So, when we look at what's happening even in the US, it's not good. The other thing that we're really concentrating on right now is we're trying to estimate what we're going to do in the US for seeding intentions. Why does this matter to us? Well, if we seed more soybeans than we do corn, price of fertilizer goes down here in Canada. In fact, we've seen it go down. Why? Because the seeding intentions are shifting a little bit less out of corn and a little bit more into soybeans. Wheat will be down slightly, especially in places like Kansas or southern Nebraska, eastern Oklahoma. So we estimate early about 95 million acres, down from about 99 million acres. There's your corn. Soybeans are going to be up from about 81 to about 85. Cotton, really flat acres at about 9 to 10 million acres. Canola, not very much. I think guys are going to stick around soybeans and corn. So where does that bring us to? Well, that brings us to land values. How many people, if you put your hands up or even just acknowledge, have listened to our pundits over the last month or so, a couple of weeks actually, about land values in Western Canada? There's a thought process out there right now from one individual that says land values are going to absolutely crash. And we're going to get into the 1980s again. Well, the reason why I'm doing this is I'm old. I went through that. And went through that both as I started off in lending and then moved to an economist role when I started working for the province of Manitoba. That was 38 years ago. And anyways, two things have to happen. We have to have low grain prices. We certainly are getting to lower grain prices. Back in the 1980s, we had very, very high interest rates. But that actually, everybody says, well, that was the cause. No, it wasn't. It certainly contributed to it. At that time, of the total expenses, it was about 4%. Interest was 4% of our total expense. It was because we were lending through 1974 up until 1980, We were lending to individuals that really shouldn't have been lending to. The other thing that I'll give you a quick story. In 1980, Dad and I wanted to buy. Agriculture was pretty good in the spring of 1980. I got land value spelt there wrong. We wanted to buy 1,280 acres. I think I've told you the story in the past, but we wanted to buy 1,280 acres. The price of the land, he wanted 320. We wanted to pay him 275 to 95. And what happened was interest rates went from 8% up to 21%. Of course, then we couldn't sell wheat to Russia in 1980, late 1980, 1981. And of course, we backed up, and price of wheat went from close to $6 a bushel down to about $2.40 a bushel. We never did buy that land, thank God, because I would have, I think I would have struggled with those. But, we still have demand. We still have countries that are growing, that still need our food. What I'm trying to say to you is that the growth in land values that we've seen, 12%, 13% in Saskatchewan, 10% in Alberta, are probably going to absolutely slow down as we go through the fourth quarter of 2026 and we go through 27. I think we're going to flatten right out. Are we going to get into a land crash? I think that's going to be more. I think we're way too early to say. I'm not sure that I would be buying land right now, unless I was getting it from an uncle or a neighbor or whatever at a cheap price. But each to their own. Okay, just showing you the land value. For you guys that are young, I started farming in about 77, it was nothing but money in 77, 78, 79, and then of course we came to 1980 and 81 and land values fell off. But there has been this massive run up. Look at 2010 to 2024. This is Saskatchewan land value. I can't spell value. Jesus, God's sakes, thanks God I got so much education in economics, because I can't spell a lick. Fertilizer prices, I think as we get closer to mid-February, I think nitrogen will continue to come down. I'm not sure it's going to come down very far. As I work with a lot of suppliers, and, I think that there is this thought process from our agriculture suppliers that, we know we're going to have to drop price in 27. I think this year, I think a lot of the suppliers are still trying to get as much out of us as they possibly can. Thank you to DTN. They do a fantastic job. The problem that we have in Canada is trying to get nitrogen prices charted. So DTN is a great source, but it is US and it is Omaha, by the way, just to give you an idea. Now, the other thing is what happened here in Canada last year. Well, we grew a very, very big crop. Now, the other thing to remember is globally, the last 4 consecutive years, we've had a massive global crop, which is putting pressure on our commodity prices. We can't get away from that, ladies and gentlemen. We're going to dive. I wanted to talk quickly about Ukraine. Ukraine is exporting around about 14.1 million tons of wheat right now. Now, they generally will do around about 16 to 18 million tons. So one of the things is if we can settle Putin down, and that's a really, really big if. I just don't see it happening right now. Then that would, if it was happening, we would add around about 4 million more million more bushels into the export market. Not huge, but it is enough to gyrate prices in the wheat market, because there's just too much wheat around globally. If we're talking about durum, we're looking on a global basis. Production rose about 2% to a 9-year high, 37.3 million tons, with pretty good yields in the EU, North Africa, and North America. Of course, Canada too as well. Total supply is up about 4%. We are hoping that consumption will increase because price will go down. We know that closing stocks are going to be pegged at about 8.3 million tons, increasing to about 3.1 million tons, or by to 3 million tons, sorry, 20% above normal levels. And of course, we know at the amber price of Durham right now, about $280. If we look at, one of the big producers is Algeria. They would like to get to self-sufficiency. They are a big buyer of Canadian Durham. Tunisia are expected to have a pretty good crop this year. Morocco is dry, but the big producers, and Morocco buys a fair bit of Durham out of Canada too as well. So if we look at European Durham yields, we're regressive. I think that's a nice way to put it, particularly so regressive yields are expected to decline from typical or exceptional. Certainly Spain, which actually saw record results in 25, but in 26 they did not. It was just a little bit, weather patterns were not good. Acreage, certainly lower farm gate prices, including fertilizer, certainly put a squeeze on margins. As of early 26, this is just the other day, French Durham crops were about 80% planted, and we're sitting in good conditions. So again, if you're looking at Durham, you gotta, understand that in the context of global is we got a lot of supply, and we're having a pretty good crop going into the spring on the winter crops. Let me just jump across here. This is U.S. Durham. Again, about the same amount of production, same amount of exports as previous years. Very similar to us, a lot better crop than in 23 or 22. Canadian Durham, we did fairly good, probably second biggest crop in the last 10 years at 7.1, just to show you what we did. So we got about 7.1, about 12% more than last year. Total supply is going to increase about 8% more than in 24-25 to about 7.6 million tons. Domestic use is going to be, we expect to be stable. We are not a big crusher of Durham. We don't create a lot of pasta here in Canada. Exports about 1.4 million tons, less than in 24-25 to today. Carryouts are really going up with a stocks use ratio of about 24%. And this is what I wanted to show you. This is Durham balance sheet. What we want to concentrate is on our production, 23, 24, 24, 25, and then 25, 26. Our 26, 27, we're going to be probably in around about 6.1, 6.4. But we have about 7.135 with our carryouts of being exceptionally large at 1.5. And of course, the average price going from 321 down to 280. I know we're in southern Alberta, southern Saskatchewan. Durham isn't going to be a great moneymaker. Well, I think it's going to be very hard to make money on Durham. This is just last week's price in midpoint Saskatchewan. So in and around Saskatoon, Regina, probably hedged more towards Estevan, Swift Current. So we're certainly under that $280 a ton. What I did is, Mark, you wanted to see profitability. I think you may regret that. If we're at 80%, in other words, we're the sort of the best of the best. If we're on the brown soil zone, 41 bushels an acre, dark brown, which is going a little north, more towards bigger, maybe a little bit North Battleford area, south of North Battleford. I've got a price of $9.20 a bushel. My total in cost, let's get down to total expenses. Draw your eyes down to total expenses. right at the bottom, 394 or 395, and then 436 for the total cost. Now, remember, ladies and gentlemen, what I want you to think about is that I've got labor in there. I do have, if you look up, if we follow down seed, look at expenses per acre, seed, fertilizer, our herbicides, our machinery, stop at custom work. I did put in $23.50 for custom work. Now, custom work can be a lot of different things. It's kind of a catch-all, for if you're putting on a little more fertilizer, or you're having some custom combining, or if you're custom seeding, or you can take that out, ladies and gentlemen. What am I trying to tell you? It is kind of a catch-all that if we've underestimated something. I do have labor, if you follow down, building repair, property taxes, business overhead, which is going to be all your insurances, your paying your accountant, all those fun things. Labor, I do have labor in there. I'm working on a farm that's around about 3,000 to 4,000 acres, which is pretty average for Saskatchewan. If we drop down, we got less our living costs at $20. That's around about $60,000 per year. And of course, all the gentlemen in the room are going, "Oh, that's way too high." No, it's not. All ladies are going, "No, it's probably not enough." I've also got a debt payment in there, $75 per acre for your area. It is more if I go into the Red Deer area, if I go through, through the Tisdale, Melford area. They're a little bit higher debt payment per acre, but you look at it and say at 57 bushels an acre on Durham at 920, I can make in my jeans at the end of the day around about $88. Now, if you are average producer, 41 bushels an acre on black, then you're at minus $30 an acre. So what I'm trying to also show you is yield is going to be the maximum, is going to be absolutely critical. We need, and everybody goes to church on Sunday, but we need to pray for good weather this year. Otherwise, all of our crops are going to be a little bit hard to suffer through. So, Tyler, is there any questions on Durham? I think it's pretty straightforward. We got lots of production global. We got lots of production in North America. The only country that was really dry was Morocco, but Morocco is a fairly big buyer of Canadian Durham. But a lot of Durham around.
There wasn't a question around Durham, Brad, but there was one that came up earlier. Kind of as you talked about kind of price of land, price of inputs.
Yes.
I'll maybe bring that up now if it works.
Yeah, I think it's perfect timing.
So maybe just looking for a little advice from yourself, just with the current economy. Do you think younger people should be getting into farming, or should they focus on another career? And that's from Emily.
Emily, I'm not sure I like Emily. Emily, I apologize. I think it all depends on your situation. I've got one of my cousins is a young farmer, and a fantastic kid, absolutely fantastic kid. His dad's a very, very, very good farmer. Much better than our family. Their family is, they got a little better land than we had, but they're better farmers than we were. I am absolutely backing. In fact, I stopped in it at the farm the other day because he's renting my land too as well, my uncle's land, and I'm charging him well below market rate. And he said to me, he said, "Are you sure you're satisfied? Like, you understand that, you're charging me a lot less than everybody else is paying." And I said, "I don't care. I honestly don't care. I've made my money. I desperately want my family to buy my land and my uncle's land. In fact, the contract that we have on rent does have first right of refusal. In that situation, I am incredibly encouraging him to, or her, because don't forget it was some of my land went to a niece. But I'm absolutely encouraging him to and his family. He got a very, very young family to farm. It's very, very difficult for people who don't have the backing of their family to farm. Land values are very high. But I think it's a niche. One of the things that I've really been just surprised about is I've got a couple of young producers, but what they're doing is they are producing plants, garden plants, tomatoes, whatever. And they're going into places like Walmart. Costco is buying them. So in other words, is it still agriculture? Absolutely. It's just a different version of agriculture. Tyler?
One question on Durham as well.
Yes.
This is from Carl. Just curious
Carl.
why you used 338 metric tons in your cost breakdown versus the previous of 280 metric tons that he forecasted in your that you forecasted Durham to be at.
Oh, sorry. Let me back up. Sorry, I'm not quite understanding
there.
Why am I using? Tyler, say that again. I'm just not quite understanding what he's.
Yeah, I'm just comparing the slide as well to the comments so I can try and help you here.
Did I make a mistake, Carl? I could have. They're all standardized. So I've got my variable cost at about 270, or let's go black, 315, or go dark brown, sorry. 315, and then I got 436 because I'm adding on my other expenses. Then I'm subtracting off my living and subtracting off my debt payment.
Just go back to the previous slide. Oh, Carl just added a comment here.
Okay.
So he references you used
the 280, like this.
Yes, I think that's what.
Okay, so yes, absolutely, Carl. The 280 is going to be a full year of Durham theoretically. It's also the 280 comes from Ag Canada, and what I've tried to do is I've tried to more personalize this to southwestern Saskatchewan and southern Alberta. I think the 280 might be a little bit too generous when we look at the crop that's going to come out of our Algeria, Spain, southern France, and I think that's why. And the one thing, Carl, I desperately, and Tyler, I forgot to mention this, I desperately want you to do, desperately actually, is I want you to take my numbers with a grain of salt, okay? If you've got contracts, or if you believe that your number is going to be, say, 1045, I just picked that out of the air, on your sale, put that in. I'm just giving you a benchmark of where I think it's going to be over the entire 2026. You're probably going to sell that, Carl, into 2027. A lot of that, you're probably going to sell fairly heavily in October, November of 26, sell the rest probably in the spring of 27. So that's the only reason why, Carl. Great question. Okay, let's move on to wheat because we are getting short on time. Production, 824 million tons. Are you kidding me? If you were to listen to me about 15 years ago, we got to 630,000 tons of global wheat production, 630,000 tons, 200,000 tons less. And I told the audience, we'll never that was a record crop. We'll never get this high again. Well, 824. If you're wondering why your wheat price is, including durum, is not going up, well, certainly, we know now why. We are going to close out stocks at about 274.9 million tons, 6% above area or opening yields. Our top exporters, that's going to include US, Canada, Australia, Argentina, EU, Russia, Ukraine, and Kazakhstan, as I always talk about. We also have mass amounts, 495 billion tons of stock. And you can see if we go backwards here, 824, we have just literally over half of it to export. Beginning stocks, of course, you can see China. China's come down to about 128. They got the others, that would be India, Pakistan, for the majority of it, about 70 million tons. The Black Sea, about 16, and of course, our historical 5, which is, again, Canada, US, Australia, Argentina, the EU, is around about 46 million tons. Stocks to use ratio, about 34%. That's getting upwards, of course, not as high as 19 or 20, but it's certainly coming back up to 23, 24. Our ending stocks, then when we get to it, are moving upwards. We got our exporters 57, 22, 75, and 125 for China. China. That isn't that what Trump says? Global ending stocks then on price. You can see what's happening with price and stocks. Really having a massive change. Price is certainly down. I cut that slide off a little bit. On the U.S. side, what were they? Sorry, this is world. Oh, I did want to show you this. This is world production and trade. By the way, for the keeners in the room, these slides, type into your search engine, U.S. Wheat Associates. U.S. Wheat Associates. I'm going to be giving them a massive shout out. I do it every year to them. But these slides, this is where it comes from. Within about 2 hours of the USDA report coming out, these slides are already produced for you. I'm a visual learner. I don't like reading. I like to visually see things. But you can see production, let's go to 2025-26. Production, 842. We've got use of about 824. We've got trade about 220. You can see that we're building stock, and of course that's having a downwards pressure. Ending stocks in the U.S. again upwards too as well. They had a fairly decent crop, actually quite a good crop. Wheat ending stocks, hard red winter, actually quite high. That was their big crop, of course, out of Kansas. And then hard red spring, pretty equal. They seed mostly our winter wheat, which is our hard red winter. FOB, the price of commodity to the Gulf, very, very flat. No real significant increase. This is what we price off of, which is Pacific Northwest, a little bit higher. We're in and around about 275. American dollars. That's for our 14. Not what you wanted to hear. Exportable countries, you can see I gave it to you there. If you're a keener, Australia had a very, very big crop. Canada had a big crop. EU had a big crop. Oh my God. Russia had a decent crop at about 85 million tons. It's ridiculous. Everybody's had. This is just Australia. How come that slide got cut off? But it's actually, again, our production was about 34. They usually produce around 25, just to give you an idea, ladies and gentlemen, 25, 26. Argentina had a very big crop. Their ending stocks are going to be large. Of course, China's buying a fair bit of Argentina wheat. Russia, 89.5 in production. And our exports are going to be in and around about 47 million tons. Canada is doing around 20 million tons of high quality wheat, but Russia's over doubling us on exports. There's Russia ending stocks. World importers, Egypt. Now, we used to, if you would have went back a year ago, we would have said Actually, China is the largest exporter. China's not even on the map here. Egypt, Indonesia, we do ship a fair bit of wheat to Bangladesh out of Canada, Algeria, especially for our durum, Philippines, Turkey, Brazil, Morocco, Nigeria, and Bangladesh. Canadian wheat, just our total wheat in supply. When we look at a Canadian wheat, there's essentially our production. Canadian wheat, our winter wheat, 3.5. So our production in Canada, if you believe Stats Canada, about 11% bigger, about 32.8 million tons. About $265 is what we anticipate. Of course, when we talk about total supply, up about 7%, from 2024, about 14% higher than the last 5-year average. And we've got to get to our carryouts. Our production then would be about 32.8 if we're believing Stats Canada. Total supply would be about 36, and then our carryouts about 6 million tons. When we start to get into 6 million ton carryouts, we better have China buying one hell of a pile of Canadian wheat. This is our spring wheat out of Minneapolis. This was as of, I believe, Monday, in and around about 11 o'clock in the morning at 565. You can see that cycle where it peaked in 2022, of course, because of COVID, and we're slowly coming down that backside. Our weekly price in midpoint Saskatchewan, this would probably be more in and around Regina, Saskatoon, sitting on number one red, sitting somewhere just about $230. If we look at our winter wheat, certainly below, about 255, 257. When we get into our production, let's go to the dark brown, 54.9 bushels per acre. I've got a price actually low. Please remember that I've got to give a price. This would be more of a combination of 1, 2, and 3. 687. I can certainly, you can certainly move that to 750. We sold some wheat the other day in and around 720, 725 a bushel, $337. My variable costs though are $344. My total cost all in at $465. I'm in my jeans at the end of the day on dark brown are about negative $88.81. I'm going to be honest with you. We're certainly in our own operation. 54 is a pretty good yield. I may be low. If I'm going to be low, I'm going to be low on the price side. If I get to $7, if I can get to 750, I'm a break even. That's where my break even is on our own farm, in and around that 750 range. We're going to try to eliminate, or not eliminate, but reduce the amount of wheat we're going to grow. We're going to look for, that May time period to sell our old wheat and maybe do some pricing of our new wheat. Any comments? Okay, I'm going to very, very quickly talk about corn. One of the reasons why our wheat is so high is I'm going to jump to China had a very good crop last year, which is slowing down imports into China. If you look at the area, sort of the northern provinces, sort of from the Henan, Shandong up to, Mongolia area had a pretty good crop last year. Certainly it was a record at 301 million metric tons. It's very, very large, up 2%, 8% above the area average. This is just looking at China. One of the reasons why I'm showing you this, if you're looking at wheat, well, if we've got lots and lots and lots of corn around, that puts pressure on wheat. If we have wheat and corn, that puts pressure on oats and barley and everything else, soybeans and canola and everything. So that's why I'm showing you. U.S. wheat, we had a very, very big crop. We had a big acres, 99 million or 98.8 million acres. Our yield was around about 177.1 versus, say, 171. There's our exports. That's if we make those exports this year. We desperately need the U.S. to export corn. There's our yield. Well, they got 186. I had 177, so maybe a little bit better. And of course, then we get into a supply and demand of corn. Corn futures, if you want to know where your barley and your oats are going, we'll look at corn. Actually, corn kind of bumped up a little bit from $4 to $4.40. China started buying a little bit. We started to crush or use more corn too as well. I'm going to jump over and we're going to go into barley. Barley production on a global basis was over about 150 million tons. You know, I'm going to, you're going to get very tired of me. Ending stocks are projected to be about 20 million tons, substantial increase. But because we've had global crops, we're really big, massive global crops. We're really looking at supply. Canada makes up about 6%, European Union about 35% of the barley, Russia 11% and increasing. Key barley importing countries, China. Now, why do I talk about China and corn or in barley? Because this country remains the single largest importer, sometimes accounting for as much as 50% of the global import market. The Middle East, of course, Saudi Arabia, Morocco, Kuwait, mostly in the feed barley. China's between feed and malt because they are converting into beer. Japan, the United States, obviously, and Vietnam and Vietnam and Thailand. Canadian barley production, about 9.7, wasn't as high as 2020, but it's still very large. This is just looking at production versus beginning stocks. Total supply, around 11 million tons. Ending stocks, kind of high, ladies and gentlemen, 1.6. Now, this would be more traditional if I went back 20 or 30 years ago. You know, 1.6 wouldn't be burdensome, but I hate to tell you this, it is burdensome now. So what are the outlooks? Well, hopefully strong demand from China particularly, but we got very large Canadian supplies. Hopefully we can get that sold off. We've got we got good margins in hogs. We got good margins on cattle, on our feed. We do have major global competition, and that's really a lot of it's coming from Australia into China versus Canada. Okay. Obviously, we're talking about a shifting of promoting new, higher performing varieties. And of course, weather is going to be our problem or our blessing, depending on how you think about it. Excuse me. Okay. So what are we looking at? Let me jump to our closeouts here. Production, 8.9, 8.1, and then 9.7. You guys, Saskatchewan and Alberta, did a fantastic job of growing barley. And you've heard me for the last couple of years. I've been extremely strong on barley from a production point of view. I'm now switched, out of barley, but 11. We're going to have about 1.5, 1.6 million ton carryout. I've got a price. So what we're going to do is we're going to look at feed barley first. I think that's what it says right up there. Feed barley. If we're on the dark brown, I got 481 for feed barley. Now you guys might be yelling at me for that. That might be a little bit high, or a little bit low, depending on where you are. If you're in north of North Battleford, you're going to get a better price. As you get closer to the feedlots in Brooks and High River, the price gyrates a little bit. 358, and I've got 409 into the crop. That's including my debt payment. So I'm negative 51 on my feed barley. On my malt barley, I'm I got $5.90 for malt. And again, if you've locked in some contracts for this at higher, certainly my guys, we are at higher than that from selling our malt barley. But I'm looking at 26, 27 prices. Remember that, ladies and gentlemen. I'm giving you a price of you selling that in the fall or in 2027, the spring of 27. So be careful how you look at it right now. The crops hasn't been sold yet. So I've got negative $100 on malt, easy for me to say, malt barley. And again, if you look at feed barley, pretty close to about $210 per, I don't wait. Okay. Oats. And then we're going to stop. Well, we'll stop quickly, Tyler. Oats, just looking at the market size. One thing that we see globally is an oat market, expanding oat market. I just showed you from some bigger players, who's buying. General Mills, of course, is our big dog. Nestle, B&G Foods, Mars, PepsiCo, big buyers on the North American market. Worldwide, oats is not a world crop for me. It is increasing though, to 3. Oat futures, what can I say about oat futures? Ugh. At 302, it's going to be very, very difficult to produce oats based on Chicago futures. Our family is a very big grower of oats. Now, one of the things that drives oats is health and nutrition. Now, the problem that we're running into is, things like oats for cereal, oats for oat bars, oats for milk. If you're certainly in California, because the consumer has less and less dollars, that demand for the better quality food is actually going down. It sounds ridiculous, but it does. As people have less money, they really look for the cheaper cuts of beef, the cheaper cereals, whatever you're doing. So that's really affecting, Canadian oats. We harvested 3.9 million. That's about 17% higher. Production, based on a 5-year average, is about 5% higher. Supply is up significantly. And of course, then we look at, this is oat price. If we look at our carry-ins and carry-outs, our production was 3.9, very, very large. Most of this is Saskatchewan. Okay, it's not Manitoba. Manitoba did not have a great oat crop. Our oats was about 1.5 feet tall. And usually my wife is about 5'4", 5'5". Lots of times she will disappear in our oat crop. And yeah, it wasn't even up to her knees. So blame it all on Saskatchewan. The Alberta guys just blame it on Saskatchewan. Total supply 4.4. Our carryouts are not terrible. This is the interesting part about this is 750, quite frankly, is not terrible. Not like wheat or barley. If we look at, now you guys don't grow a lot of oats, okay? If you grow more oats, more in the North Battleford area, so I'm going to quickly, if we're on the dark brown, the brown, you really don't grow oats. You're probably breaking even. And I got 410 oats. This is mill oats. I'm not going to sell oats under 410 because that's basically where Saskatchewan is in break even. I have shown this to a number of my oat producers, in the Tisdale, North Battleford area, towards Meadow Lake area, and bigger area. They're okay with my prices. They're not okay with my yield. Basically I'm looking at, I'm not going to grow oats unless I'm getting 100 bushels an acre. And on the brown, or even on the dark brown, that's going to be pretty hard to do. I'm going to stop there, Tyler. I'm going to stop quickly here, Tyler.
Yeah, no questions in the chat right now, Brad. So if you want to keep going, go ahead. We've got about 20 minutes
let's just keep
left
going
here
because of time. We've got to talk about soybeans because we got to get to canola. Okay. Now we price. Remember, ladies, gentlemen, we price really off of off Chicago beans in Winnipeg here. Obviously, we have some different dynamics. We got now contracts we have permission or whatever's happening in China. China's going to start buying canola at a 15. Remember, it's still not zero. It's 15% tariff rate quota. So we got to keep that in mind. On the soybean side, ending stocks in the 25, 26 were about 1 point. Oh, Bradley. That's what my mother calls me when she's mad at me. 124. Brazil's production was absolutely bat crazy. 178. Now, just to give you an idea, U.S. produces around about maybe 131, 138, and they produced 178. Their production went up about 10 million tons. 10 million tons in 1 year. Remember, we only produce about 30 million tons of wheat. This is our biggest crop. They went up 10 million tons in 1 year. Okay. So where are we? Well, we look at price. Export prices in around the 450. Soybean meal in around about 350. When I'm doing my ag outlooks or when I'm pricing, I'm looking at these daily. These soybean palm export prices, because I want to just look at where are we in compared to canola. Where our production is, of course, is in the center of Mato Grosso. So if you guys haven't, if you haven't listened to me before, or that, see if I can grab it here. This area right in here, this is Mato Grosso, okay? That's the area that is producing mass amounts of increase in production. Now, we actually started producing beans. Oh, come on, Brad, you dumb jerk. We actually started producing beans in this area. Come on, down here. And slowly we moved into this area. Of course, this area right up here is the Amazon rainforest that you guys all see, monkeys swinging out of trees and snakes coming out of bushes. I hate snakes, by the way. This is the expansion area, okay? And they can still expand into this area right here and a little bit going north. Not much more, but this area is still massive, okay? This area right here is still absolutely massive when it comes to additional production. So when we look at it, we've seen 171, 178 million tons coming out of Brazil. And of course, if you look at our production, and I don't have a slide, an arrow, but if we follow the blue bars, that's their increase in production. Isn't that bizarre? Yield is pretty flat, a little better this year, but pretty flat. They're in about 56, 57, 56.4 bushels per acre, which is slightly better than Iowa. Slightly better than Iowa. This is, though, Brazilian soybeans exports to China. Looking at 24 versus 25, you can see that in the critical months, which is August, September, October, November, which is when China buys canola and soybeans, okay? August, September, October, November is when China buys. And that was going to Brazil versus the United States. Jumping ahead, let's talk about our production in the U.S. Again, 53 bushels per acre, 81 million acres. We're probably going to jump to around 83 to 85 million acres. That is going, if we have a normal crop, ladies and gentlemen, 85 million acres at 54 bushels an acre, 53 bushels an acre, that is going to put some pressure on Canadian canola. Okay, I'm going to jump to, let's go to their soybeans. If you want to know where your canola is going, look at your bean chart. This is a 5-year bean chart from January right up to Monday at about 11 o'clock. Let's talk about canola. If we look at, harvesting in the EU, remember that there's 3 countries that produce canola. Canada is pretty much the largest, in around 19 million tons, 18.5 million tons. EU is then second, usually somewhere in around 16 to 18 million tons. You can see the bottom there, upwards of 19 million tons. France is the biggest, Germany, Poland, Romania, Lithuania, the Czech Republic, Denmark, and Latvia. So you can look really, really intelligent when you go curling tonight. France is the biggest producer of rapeseed in Europe in 2025. Germany traditionally is very close, but still pretty important to know. If we look at European production, about 20 million tons. One of the reasons why we had some fairly high values of canola last year, going into especially about the 20th, 15th of June, was that Europeans were buying canola. 16.8 versus 20. This year, we're not going to have as much demand. Here's the problem. Australia, 24.450. That is of the biggest crop ever. They had very good weather, and they harvested a tremendous crop of canola. So stable production in Europe, increasing planting to some degree. Price trends in around $480 a ton. That's in the European Union denominations. They're having the same problem, global supply pressure. They do want to reduce reliance, particularly on Canada. This is canola in Australia, harvested area against production, just to show you in a different way. I'm going to jump through because I think we probably have gotten this. Canadian markets, the U.S. this year in 2025-26 remains the biggest market at about 7.7 billion. Of course, China is going to start coming into this market, hopefully very large. Again, we sold about 69 million tons, which is about 2/3 of a mega ship. We want to see some major sales. Mexico is fairly getting bigger. Towards China is the one that we really need to ship to. Canola production, this is based. Now, I'm going to show you something. This is USDA. Okay. Now, when I'm talking to the Canadian producers, we're using Stats Canada. Okay. When I'm talking to exporters, if I'm talking to US, if I'm talking to China, if I'm talking to Germany, if I'm talking to France, everything's based on the USDA. Now, why am I showing you this? It shows 22 million tons. USDA, in their USDA report, you can go right in and look it for yourself if you don't believe me. This comes right out of the US data information. Also, this crop, or this slide too as well, comes right out of USDA. This is our total supply, crush and exports. USDA says that we're going to have 3.708 million tons of ending stocks. Now, remember what I always tell you, the closer we can get to 1 million tons, much higher price. Okay, 1.5. They say we're at 3. When I go to, I'm going to jump through here just because of time. I've showed you this before. I'll come back here. Don't worry. I'm going to come back here. I'm trying to make a point here and it's not working. Now, if we look at Stats Canada, okay, as of December, they have us at 2.9 million ton carryouts, 3.7 versus 2.9. Which means that somewhere in here, somewhere in exports, are we going to get to those exports? USDA would argue we're not going to, and I can't explain basically a 1 million ton difference or 800,000 tons difference. That's an awful lot of discrepancy. So it'll be interesting to see what comes out of Ag Canada over the next couple of days. Now, canola. Here's our chart. It mirrors our soybean chart at $639 as of Monday. Went down a little bit the last couple of days. Now, strategy. Ladies and gentlemen, you know I always do my own pricing strategy, and something that I learned from the best of the best Western Canadian producers. I'm going to put my bottom number in at 600. At 600, I ain't moving. I ain't getting out of bed for $600. 620. So I'm looking at the bottom of that at 620. I am, from 600 to 620. No, as I move into the 625s, the 630, the 650s, I would argue that based on my supply and demand is where I'm going to make sales. In other words, taking everything that you know now about soybeans, about the pressure from wheat, corn, soybean production, what's happening in China, the ability of Australia to ship canola to China, I think my sales are going to be in the 620, hopefully upwards in the upper echelons of 650. But I do believe that's going to be later than sooner. And we always talk about that, that period of late April, early to mid May, and if it's dry, more into July. And I think that's where, if we're going to get over the 650, get into the 660s, the 670s, that's when it's going to be. I am not going to, if I could get upwards into the 660s, 650s, 670s, I think that's where I'm going to make the vast majority of my sales. I don't think I'm going to wait for 675, 700 this year. From what we know now, this is my pricing strategy. I work with a lot of very, very much more intelligent people than me on a producer level, quite frankly. And I think this is where we've come to a consensus. Now I'm going to stop there. No, let me go one more slide, Tyler. So at 45 bushels an acre, I got $13. At the end of the day, all in, all done, I'm still going to be growing canola. And we're going to grow a lot of canola in Manitoba, Saskatchewan, and Alberta, particularly as we go north out of Edmonton into the Peace River country. We are going to grow one hell of a pile of canola. If we look at wheat, if we look at oats, if we look at barley, even lentils, you know what I mean? I think that, the canola, when the guys and ladies pencil out things, we're going to be pretty settled on some canola. Okay, just very quickly, we'll touch on flax. Not a lot of demand for flax right now. Our crop was pretty, was higher at 454,000 tons. Jump through and get to our ending stocks. Ending stocks about 275, not overly burdensome, but it's demand. And you can see that as we go through. This is as of this week, Monday. On the flax this would be in Midpoint, Saskatchewan, more towards bigger Rosetown, Swift Current area. On 28 bushels an acre, I've got to get, close to $16. $16, I'm making about $60. About $60, $62, $65 at 28 bushels an acre. Which again is one of those crops that you might want to consider when we look at profitability. Pulse crops, one of the things I'm going to tell you is Australia, let's come back to it. Australia had a huge crop. If we look at chickpeas, field peas, but particularly lentils, ladies and gentlemen, faba beans, very, very large. I'm going to jump through this. You can read this at your nauseum because you will be nauseated. Exports, very large in the chickpeas and the lentils going into Bangladesh, India, China. Of course, our peas, I'm going to jump through. we've reinstated the 30%. India has reinstated 30% effective on yellow peas. Let's be clear about that. The big one, of course, now that we've hopefully opened up the China situation, but we are getting, by the way, who is the biggest seller of peas to China? Now, Russia. Canada owned about 92% of the market. Now Russia owns over 50% of it. On our P balance, this is our Canadian P balance. You can see our carryouts. By the way, I've got to give a big shout out to Marlene at Mercantile Consulting Ventures Inc. She's forgot more about the pulse market than I'll ever know. I really rely on her intelligence to provide us with information. So check her website out. She does do a newsletter within the Saskatchewan Pulse Growers Association. That's the Saskatchewan Pulse Growers. Fantastic information. Visit her. Certainly tell her I give her massive marks for that. But you can see the carryouts, as we go through 25, 26, very large. Blower, big pre-producers, Canada, look at Russia. Ukraine, EU, China, India. Year-to-date exports, of course, China is not one of our happy people until now. Hopefully we can make some sales. So really, let's jump down into the pea market. When we get to it, we got production about 4 million tons, up from about 3 million tons, so 1 million tons more. Our exports about 2.2. We need that to increase because look at our carryouts, 1.565 million tons. Our stocks to use ratio have gone from 10% to 54%. And again, that's the other reason. Now, let me be crystal clear about something. If we can get some sales going into China, some significant sales going to China, hopefully maybe Carney can work his quote unquote magic with India, but I don't think so. But at least if we could get another 1 million tons, that would be absolutely massive. We could sell another 1 million tons of yellow peas, particularly is what China buys because India's, what's going to happen is they're going to go from Canada into China into India. It's just going to go a different way. And there's your yellow peas sitting less than $7 as of this week. If we're talking about yellow peas, I got $7.25 as a price. Again, that could improve, ladies and gentlemen. 45 bushel acre on the dark brown. That's $109 negative at the end of the day. I've got to be over $8, actually about $8.50, $8.75 before I'm going to grow, or at least based on our carryouts. There's our greens. Our greens are a little better, just under $10. I got $9.50, and again, that could improve. If there's a dark horse here, ladies and gentlemen, from where we are today, I would say the pea market, mostly the yellow, is the one that's probably got some opportunity because we can open up China. Everybody is telling me, they're phoning me and saying, I think I had 26 or 27 calls last night. I think I did 10 or 15 already this morning before 9 o'clock. Everybody's saying, well, what do we expect in the canola price because China? And, unfortunately, ladies and gentlemen, we're not, we don't see as much upside. Do we see upwards into the 650s? Yes, later on this spring. But I'm going to tell you, you're going to freak out because we actually are going to go down as we go through February. As we start harvesting that mass amount of beans, I think that beans and canola is really going to take a tumble, probably into the early 500s, 520, 530, 540, before we start coming back up. So on the greens, we're about negative $20. But again, these are some of those crops that we could potentially look for. I think on the greens, I've got to be sort of in the $11 range before I see, significant profitabilities. Okay, now let's talk about lentils. I've been, we warned you a little bit last year. Actually, we warned you a lot last year about red lentils and what we were looking at. Our carryouts are very, very large, 1.5. And again, this is again, Marlene, excellent, excellent information. If we look at sort of lentil production, Canada, India, and Australia, look at Australia. Canada had a very, very big crop. Jump through, look at exports, India, Turkey, United Arab Emirates, Pakistan, a little bit from the others, not a lot from anybody else. So we do have to sell lentils to India. We have to. We just have to. It's one of those things. We're going to look at the red lentil market. It is, all I can say is seriously oversupplied. What am I also going to tell you? I think though that we are at the bottom of the market. There we sit at 3.6, 2.4, 1.8 in 2023. Gives you an idea what I'm going to show you. Production at about 3.3 million tons. Our total supply is close to 4, and our carryouts of lentils 1.5. Again, we need, and our stocks to use ratio went from 9% to 63%. Red lentils are selling, and I did tell you, I thought between 24 and 22, that was exactly my prediction last year. I think we got through most of that. This year, well, I'm going to show you here in a second. I got 24 cents. I'm going to be honest with you. I can't see profitability under 24 cents. At if I'm only at 1,500 pounds, I'm losing money. If I'm at 1,800 pounds, I'm making money. $60. I'm still going to grow lentils. The problem that I see is, can I get 24 cents? To get 24 cents, I need India to start buying, and in a major, major way. Now, remember that they have the option this year of buying from Australia. On the green lentil side, I need at least 26 cents. That's at, say, 1680 yield. Certainly at 13, call it 1330. I'm not making money at 16, 1700, 26 cents. I'm going to be growing lentils. And I look at it is compared to anything else. That's going to be the option or the objection. That's not right. That is what I would like to get to. And of course, we're sitting at small grains in and around about 20, 21, 22 cents. Mediums, a little bit lower than that, just under 20 cents. Frenches, about the same, about 20. Chickpeas, just really, really quickly, we had a very big crop of chickpeas. Our carryouts, again, have gotten burdensome, about 102 versus 11%. Lower prices, we're sitting at below 25. I got a price of 26. On the brown, you can do actually quite well. These are, chickpeas, maybe the biggest issue is rainfall. What I mean by that is humidity. The disease potential on chickpeas is fairly high. Desis, we're sitting at about 15, just under 15 cents. Let's see, on the chickpeas desis, if I can get up to 1,900 pounds at 24 cents, $40. If I'm down on the brown and I'm at 1,400 pounds, I'm going to have a hard time making money on the desis. Quickly, Tyler, mustard, just in case there's any mustard production. Mustard was down. Actually, we're sitting about where we were last year. Price is about the same as last year, around about for yellow. Well, how come I got yellow mustard? It should be, I think I got 40 cents. Brown Oriental, let me just jump because 40 cents on yellow. I'm not making money on yellow. On brown, I'm making less money. Mustard is not going to be a big production this year. If I'm going to grow mustard, I'm going to harvest that mustard and I'm going to put that mustard away. Same with the canary seed. We did produce, actually, in fact, I drove from, where did I drive? From Kerrobert down to Rosetown a couple of times all summer. Of course, I travel an incredible amount, as you guys know, through Western Canada. Had some pretty nice canary crops through that area. Our carryouts, again, though, their stocks use ratio went from 35 to 114%. Of course, the price then has dropped very, very low, somewhere around 17 cents. You're going to laugh at me, but canary seed, I tried to show you it on dark brown, making money, but you would have to be in that 30 cents, which is at our current price. Guys will not be growing canary seed. And with that, Tyler, I am 6 minutes over. I apologize, everybody. And quite frankly, Aaron, my throat needs coffee. Questions? We like questions.
Got a few, Brad. I do want to acknowledge that we are out of time. But would you be okay to stay on for a little bit longer?
Absolutely. I know I'm in between lunch, you guys and lunch, so I know that's not a good place to be. But I am on here till we finish.
I'll maybe start with the first one here, and I'll kind of maybe combine a couple here. Nadia asked, what should a producer prepare for over the next 5 years? And Stuart made a comment as well there around just looking at the yields that you're projecting, say average yields. A lot of losses are showing up, and maybe do you want to try and tie in those two together?
Actually, Nadia, a fantastic question. I've been warning everybody for the last year or two, maybe a little bit more than that, that we're on the backside of that cycle. I think one of the things that is going to be hard for you and I to swallow is that we probably haven't hit bottom on the oil yet. I think the bottom is $50 to $52 a barrel. Now, why am I telling you that? Because we want to talk about grain. Well, what happens is oil has to turn around first. Oil turns, metals turn second, agriculture turns third. And there usually is a 9 months to 11 months lag. So, in other words, we still have probably a year and a half before we hit bottom within the grain cycle. Now, remember that the grain cycle doesn't automatically turn around overnight. It's actually, to get to the top, it's actually a 5-year cycle to get back up to the top. A grain cycle, any commodity cycle is 10 years. So we still have, as we look out towards 2027 and 2028, unless there is a massive drought, which, remember, only affects 1-year prices, we still have a fairly hard row to hoe to get back up into above average prices. I would certainly caution producers in the grain industry, in making significant purchases. Now, that doesn't mean that you don't, buy a quarter here or a half there, or, trade out a 780 for an X9. That's not what I'm talking about. That's routine. That's things that you have to do. What I'm super, super hyper about is your payment, your total payment per acre on your farm. A few years ago, I know another corporation, and I won't name the federal government, was running around and telling everybody you could have, $150, $180 per debt payment per acre. That's absolutely, again, my mother's words, asinine, because at the top of the cycle, you may be able to afford it, but the cycle isn't at the top. A cycle lasts, mostly 2 years. And that's why we say farmers do really, really well 2 out of 10 years. We've still got a long ways to come back up, but we still have a ways to drop yet. Remember that when we look at canola, when we look at wheat, if we were to go back into, say, the early 2000s, and our bottom of our canola market, it was $250. Now, do I think it's going to hit $250? No, but is it going to still hit $500, $520? I firmly believe that is to be the case.
Thanks, Brad. Next question for you. This is from Parker. Would the government of Canada benefit from having a bigger support in the Western ag and oil industry, and would it help Canada's current economic issue?
Oh, there's no doubt, Parker. Absolutely. There's absolutely no doubt. I got to tell you, I travel, and maybe I told you this story because it's one story that just sticks in my mind. I'm in London, Ontario. Now, remember, London, Ontario, actually, the credit union that's there is Libero Credit Union, and they are the largest ag lender in Canada, actually, where actually certainly the credit union innovation is one of the very largest too as well. But I'm sitting in the keg, and I'm meeting with my counterpart at Libero, who's the head of all of the credit, but he's a farmer, and he's a buddy of mine, and I've known him for many years. And we're chatting about, oil and gas and agriculture and that kind of stuff. And next to us, there's two ladies, and they were talking about the economy, and one of the ladies said, what all that has to happen is Alberta should just stop producing oil. And my head snapped and looked at them. I guess I was glaring at them, and how idiotic. But that's the mentality, especially in the people that voted the way they voted in the last election. That's the mentality. You know what I mean? And yet the value of their car, the value of their home, the value of their Ontario economy, or for that matter, the Quebec economy, is on the back of an oil worker, rig worker, on the back of a Canadian farmer. Yeah. Did I get out of my soapbox? I'm sorry. Yeah, absolutely.
We've got a couple more here I'll take, and then I'll provide some wrap-up comments at the end here. Brad, can you give some insight into interest rates looking forward and maybe a strategy on pricing renewing mortgages?
Yeah, that's actually great. I kind of said it really quickly, Tyler. We actually anticipate interest rates to certainly hold for the next couple of months. I would argue, though, that he being Carney, if he wants to go into an election, and there's kind of this whole little election thing popped up Friday afternoon last week, I would suspect that he's going to want to cut interest rates yet about 25 basis points. There certainly is going to be interest rates cuts in the U.S. I'm adamant about that. Probably in June. But I would say even in Canada here, we may have to, if you looked at, really studied my first charts, that consumer in Canada is not spending money. I don't know how many guys have phoned me about trading in my half ton. I've got GM dealerships, phoning me all the time. Dealerships, we're not selling new equipment. We're not selling X9s. We're not selling the New Holland 11. We're not selling International. We're just not. We're backing up older equipment into the lots too as well. I mentioned it last year that there was some good sales on older equipment, and there was. actually some good sales. So on the interest rate front, would I be renewing my mortgage now? I think I would want to wait about 6 months. I would say, though, if now's not a bad time, it's not a bad time. But I would probably, if it was me, I would wait, and let's see what happens with this government. Next
I've got one
question, Tyler.
more. Yeah, one more from the chat, and then Mark's got his hand up there.
Yeah,
Oh.
maybe I'll just
No, don't
Tyler,
take Mark's question.
I'll just pop in here, Tyler, because it's kind of tied to interest rates before we get to the next question. But one thing, I think is good information to understand. And so we talk about a couple different things around interest rates. One would be, what the Bank of Canada does with Bank of Canada prime rate. And so that, that influences, floating rates. But what we see right now is a bit of a divergence between what the government of Canada, prime rates are at and what bond rates are doing, which is primarily what credit unions set their fixed rates off of, is what the bond market is doing. And in times of uncertainty, and we could probably call this a time of uncertainty, what we see is a migration of investment from the markets, so from stocks and general investments towards bonds. And that's what we're seeing right now. And so as that demand for bonds grows, you see bond rates increase. And what that does then is increase cost of funds to financing institutions. So probably over the last couple months, we've probably seen a 30 basis points or a 0.3% increase in bond rates in general. And so that's kind of ticking up fixed rates a little bit, but you don't see that corresponding offset in increasing in Government of Canada like prime rate. So when you're watching the news or listening to news on, change in prime rate or outlook for Government of Canada prime rate, what we're seeing is a bit of a divergence between what's actually happening with the Government of Canada prime rate and what's actually happening with bond rates, which affect fixed rates. So I hope I haven't created a confusion there, but if we see an outlook for a drop in Bank of Canada prime, that doesn't necessarily mean that longer term fixed rates will also decrease, because we're seeing demand into bond rates, which is increasing those rates and cost of funds essentially.
And I think, Mark, I think you explained it incredibly well, as usual, Mark. And that's essentially why, Mark, I was trying to avoid getting into that discussion and saying, look at later in the year, where hopefully some of this turbulence, can I call it that, disruption, starts to settle down, and the bond market comes back to where we would like it to be from a lender / borrower perspective. But I think everybody's got to keep that in mind. The Liberal government, I would suspect, would like to say to everybody that things are going to get cheaper. Fixed rate, especially 5-year money, longer term money is certainly getting more expensive since September, Mark? I think September, October, on the bond market. Okay, Tyler?
Yeah, no, great comments, guys. Last question from Lori. Any thoughts you want to share about Robert Angelic and his recent podcast? He talked about capital tightening, as well as Manets have had some land listed for sale recently. Any thoughts on what the impact could be to Saskatchewan land values, rental values?
Well, yeah, and we kind of tried to talk about that when we talked about Saskatchewan land values. I am nowhere near as pessimistic as he was. I think we're about the same age. I may be a little bit older than him, But I've gone through the 1970s. I've gone through the 1980s. I've gone through, prices skyrocketing to prices literally you couldn't give the land away. I think that the difference that we have today is we have more global demand. When we, in 1980, if you study 1980, 81, and unfortunately I have to the nth degree, you'll realize that in 1980, when Russia went into Afghanistan, we shut down exporting wheat to Russia. Russia was the biggest client of Canada. We shipped upwards of 20 million tons to Russia at the time. And of course, that devastated. We weren't growing lentils. We weren't growing chickpeas or yellow peas or green peas. And we've diversified our portfolio. That's on the good side. On the downside is that we do have a lot of land that is leased. And as profitability starts to go away in Saskatchewan, Alberta, Manitoba, more and more of that land will come on the market. So do I see, and in fact, and you can go back and you can check this, the good land in Saskatchewan fell 32% from 1981. Actually, it really, really fell in 82 to 86. The poor land fell 41%. Okay. Check it out. Go look for yourself. It actually did. Do I see it falling? No. Do I see it staying stable? Our net worths are much, much better right now on a Western Canadian sample. Do we have a few producers that will struggle? Absolutely. Everybody does. It doesn't matter if I'm in a down market, from hotels to agriculture to fertilizer companies, for God's sakes, are going to struggle. So do I see massive change? No. Do I see a tightening? Absolutely. As we go through and look at profitability, we've got to be cautious. And it's more from a perspective of us, the farmer. Okay, let's forget about the banker in the room. Sorry, Tyler. But from us, we're going to tighten. We are going to pick up that good quarter right across the street from us. We are going to exchange that 790 to an X9 or whatever you want to do. Do I see massive net? Not 40, not 32%. No.
Thanks, Brad. And with that, I'll maybe wrap us up. We're well over time, but I do want to thank everyone for sticking around and Brad for answering a few more questions at the end here. Just a thank you, Brad, for your review of the commodities outlook for this year.
I think we got to thank everybody for attending. I think I enjoy it. You know that, Tyler.
Absolutely. And I think a couple things that resonated with me, I think today would be one, there's certainly some headwinds ahead based on what you shared, but you really spoke to it a couple times around just each farming operation is different. And I think it's really important that each producer has just a good understanding of your numbers. You showed some projections and some of those are specific to your own operation, and being aware of that, I think, can really help you in navigating when we have some of those headwinds coming and just making the right decisions for your operation. And I will add to making sure that you're keeping in touch with your advisor, whether it's with us or with another institution. Mark talked about fixed rates, renewal dates. I think the better you can be aware of what are you in for floating rates, what are you in for fixed rates, when are your renewals coming due, being able to have a good understanding and help you make decisions on where your risk is something that I think is really important. And that's something we can really help you with in talking that through. Just a couple comments before we wrap up. We've posted links to our next couple sessions, one around livestock coming up February 2nd, and then our family farm succession planning one coming March 3rd. You can see those there. Please go ahead and register if you can attend. I'm really excited to see what our speakers have to share there. We will be posting the slides tomorrow as well that Brad just went through. I threw a link in the chat for everyone. Just keep an eye on that website for tomorrow. Those slides will be made available for the next 15 days. You will be receiving a survey as well about the webinar, and we would greatly appreciate your feedback. That's something that really helps us make these sessions, our outlook every year, as best as possible and as valuable for you as we can. So watch your inbox for that, and like I said, please share your thoughts and suggestions with us. And last but not least, just on behalf of Innovation Federal Credit Union and Innovation Wealth, just want to thank you all for attending, and we hope to see you again on the 2nd when Brad's back again to talk about some cattle. Thank you.
Thank you, everybody.
Thanks, Brad. Thanks, everyone.
Thank you.